Well, Richard Morrow from the Lowell Resources Fund, and we're here at the Stockbrokers and Investment Advisors Association annual conference in Sydney, and it's a huge event. There's about 400 or 500 delegates here, all wanting to know what is the next trend in the industry, and also a few investment ideas, such as the resources space. I don't think people are all that aware of what we do. There's certainly a few people have come up here and they've said, well, what I'm looking for is as an investment vehicle that can capture what's happening in that exciting smaller resources space. And suddenly, you guys, here we go. And great for them to meet John on that basis.
Look, I think we're heavily exposed to gold, and I think a couple of pieces of news on the gold front that are very positive for the gold market in the last few days. One is the Moody's downgrade of US credit rating. I think that is going to be positive for gold. We've already seen the gold price tick up a bit on the back of that news. And also the asset characteristic or rating of gold itself has been put into the high quality asset basket for reserves for banks. So that is also very positive for gold, and we could see some significant buying coming when that actually comes into effect. So I think gold has been really strong so far this year, but we're expecting a bit more strength out of that. So, Richard, I think we're very happy with our portfolio to be weighted about 55% gold stocks.
It's certainly right, and with a bit of cash up our sleeve to look for the next opportunity that comes along, or to buy the dip as happens in the gold market these days.
Yeah, there's been a little bit of a pullback on the gold price. It peaked at just over $3,500 an ounce when it looked as though Trump might actually sack Jerome Powell. But everyone's sort of come down from that. Gold has pulled back somewhat, but it's still a fantastic price, hovering around $5,000 Australian an ounce and $3,200 an ounce. So, what we're saying to people who come and talk to us is the margins for gold producers at the moment are absolutely fantastic, almost unprecedented, but stock prices have really not kept pace with those margins. So two things we're expecting to see. We're expecting stock prices of the producers to increase further, and we're also expecting money that those producers are making to be utilised, at least in part, for M&A to move further down the food chain and acquire more resources and reserves.
Yeah, we seem to have the first part or stanza of the story about the M&A that's rolled out in the big companies, and I think the second half of the year is going to just continue to deliver these merger and acquisition type stories. It's going to crystallise a lot of value, I think, especially at the smaller end where we're very much focused.
Stay posted. We're just going to do some video on the floor of the conference.
And go to our website, lrfm.com.au, to keep up to date on our latest reports and a few tips on where we're investing.